What is tax audit? A tax audit is an examination of a taxpayer's business accounts and financial affairs to ascertain that tax reported and paid are correct and are in compliance with tax laws and regulations.
There are two types of tax audit, which is desk audit and field audit. A desk audit is a limited scope audit conducted at the IRBM office. It usually focuses on specific items in a taxpayer's tax return that may appear unusual or require further clarification. This type of audit does not involve a visit to the taxpayer's premises. Desk audits are typically quicker and less intrusive than field audits. They are often resolved through written correspondence and no in-person meeting is required. The outcome of desk audit may be confirmation that the return is accurate, or it may lead to adjustments and additional tax assessment if discrepancies are founded. So, for example, if a company claims an unusually large amount for entertainment expenses, the IRBM may request documentation to verify that the expenses are genuine and deductible under the Income Tax Act. A field audit, on the other hand, is more comprehensive and involves an on-site visit to the taxpayer's business premises. This audit aims to review the taxpayer's complete set of financial records and assess the overall accuracy of their tax reporting. Field audits may also include interviews with the taxpayer or key personnel to understand the business operations. After the examination, the IRBM will issue preliminary findings and give the taxpayer an opportunity to provide further explanation or clarification before finalizing any tax adjustments. For example, if a retailer is suspected of under-declaring cash sales, the field audit will involve reviewing point-of-sale records, bank deposits, and inventory records to determine the actual income.
The main objective of tax audit is to encourage voluntary compliance with the tax laws and regulations and to ensure that a higher tax compliance rate is achieved under the self-assessment system. In this regard, the audit officer is required to ensure that the correct amount of income has been reported and the right amount of tax has been paid in accordance with the tax laws and regulations. For the purpose of achieving voluntary compliance, the tax audit activity is one of the measures undertaken by IRBM to educate and create awareness of taxpayers towards their rights and responsibilities under the provision of the ITA.
In Malaysia, the RIBM carries out tax audits either as a desk audit or a field audit. A desk audit is done at the IRBM office where your tax file is handled, focusing on reviewing tax returns and supporting documents you have submitted. A field audit, on the other hand, takes place at your business premises or home, allowing officers to check your accounting records, stock, and operations firsthand. The IRBM decides the venue based on how complex the audit is, whether there's a need to physically inspect records or stock, and what's more practical for everyone involved. These powers come from the Income Tax Act 1967 and follow the guidelines set in the Tax Audit Framework 2019 to keep the process fair and transparent.
The first step in the commencement of a tax audit is the issuance of an official audit notification letter by the IRBM to the taxpayer. This letter is typically sent in writing and outlines the following key details, such as the type of audit, the years of assessment under review, the reasons for the audit, a list of documents required for the audit, and the date and time of the audit visit. This letter is usually given 14 to 21 days in advance for field audits, allowing the taxpayer sufficient time to prepare the necessary records. Upon receiving the audit notice, the taxpayer is expected to acknowledge receipt of the letter and begin preparing the requested documents. This may include financial statements, sales and purchase invoices, bank statements, ledgers, receipt, and supporting documents.
During a tax audit visit, also known as a field audit, IRBM officers physically visit the taxpayer's business premises or sometimes their home to check their reported income, expenses, and other tax information are accurate. Officers will look at documents like sales invoices, purchase receipts, stock records, and bank statements to make sure everything complies with the Income Tax Act 1967. They usually notify taxpayers in advance, telling them the date of the visit and which documents to prepare. During the visit, officers may talk to key staff, observe business operation, and inspect things like stock or equipment. After the visit, they will compile their findings and may ask for more explanations if needed. If they find any discrepancies, they will issue an audit findings letter that could lead to tax adjustments and penalties.
During the course of an audit officer will be allowed to examine all the business records and inspect stock for verification of claims made. Record pertaining of the year assessment which already time-barred will not be examined. Not only that, other than business, also meaning to be examining in certain circumstances. Next, process for the tax audit is time frame. Audit time frame is only applicable for the field audit only. It is required to complete the on-site examination between 1 to 3 days. It can be extended depends on the factors such as size of business and also the complexity of the business transaction. Second is a form which the transaction is being kept. Lastly is the extent of the cooperation from the tax. Next audit process is settlements of audit. After the audit is completed, the audit officer prepares an audit findings report for approval. The taxpayer may be called or may visit Inland Revenue Board of Malaysia to discuss proposed adjustments or provide information. The taxpayer will receive a notification outlining audit issues, reasons, proposed tax adjustments, and relevant assessment years. If the taxpayer disagrees, they have 18 days to file an objection with supporting evidence. If no objection is made or it is rejected, a notice of additional assessment or non-chargeability will be issued. If no adjustments are needed, a finalization letter will be sent. The audit should be completed within 90 days, and once settled, the same issues will not be re-audited unless new information arises. Tax audits are selected using data analytics by computer system to detect unusual patterns through risk analysis comparing company data to industry average by examining industry-specific issues like construction and medical services. The IRB also relies on third-party information to uncover underreporting, reviewing significant transactions between related companies, and considering the taxpayer previous record of return when determining audit targets.
Next one is the IRBM's right. Is right to audit any taxpayer. The IRBM has the legal authority to audit any taxpayer at any time without needing to suspect wrongdoing. Second one is right to access records. The IRBM can access, inspect, and copy any records, books, or documents related to the taxpayer's business and financial affairs. The third one is right to enter business premises. For field audits, IRBM officers are allowed to visit and inspect the taxpayer's businesses premise without proper notice.
Next, assessment and penalties. First, if an audit reveals an understatement or omission of income, a penalty of up to 100% of the tax undercharge may be imposed under the ITA. However, for a first offence, the Director General of Inland Revenue may reduce the penalty to 45% at their discretion.
Second, under Section 80 and 80 subsection 1A, taxpayers must provide reasonable facilities and assistance during a field audit. Failure to comply is an offence and may result in a fine of 1,000 ringgit to 10,000 ringgit, imprisonment up to 1 year, or both. Lastly, under Section 82, Subsection 1, Subsection A, taxpayers must keep business records for at least 7 years. Failure to do so is an offence and may lead to a fine of 300 ringgit to 10,000 ringgit, imprisonment up to 1 year, or both.